Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Chan, you're watching Indian Open. Let's go straight to the headlines. US blames Iran for the attack on two oil tankers traveling through the Strait of Hormuz choke point. Iran denies involvement. The market regulator makes disclosure norms more stringent for rating agencies. Wockhardt gets zero observations from the US FDA for its plant in Aurangabad. And HDFC will sell a little more than 4% stake in GUIDELINE Finance in order to cut stake after the Bandhan Bank deal. Well, let's take a look at the trade setup for the day. The world is not an unhappy place. I'm not saying it's a very happy place, but it's not an unhappy place. I don't know if it's because of the jobless claims coming in lower and therefore the market once again believing that the Fed support will be around the corner or otherwise. But the US markets had, well, a half decent outing in the session, so about 0.5% apiece. By the way, because of this, the European indices, which had started off lower, also moved up higher. The European stocks index, for example, had started off way lower and ended up higher. So keep that at the back of the mind. The world is not an unhappy place. However, tensions, maybe geopolitical in nature, around the corner, and that's having its impact on oil. So one, after this happened, of course, during market hours yesterday, but after those oil tankers were on fire and, still unclear about what the issue is, and we'll, of course, get to that with our expert as well. But oil prices certainly moved up in trade. They were up about 4.5% at a point of time, or 4.5% to 4.5% during intraday trade on the suspected Gulf of Oman attack, but then came off from the highs of the day on this, pessimism around global trade or otherwise. And I think that's been the order of the story around the last few weeks or months, I would add, because while there have been tensions or otherwise, you would see that larger, as this chart shows, on a weekly basis, you had more down days than up days for crude. So crude has by and large remained weak. And yesterday's show was one other example. You could argue that crude prices have inched up. But the point being, after something which was as geopolitically sensitive as what happened yesterday, after a 4.5% uptick, the crude prices came off as well. So the pessimism around world trade is more prevalent than any kind of supply side or geopolitical tensions that may come up to crude. 61.29, nothing that India will not like too much. Asia's mixed bag, marginally in the green to marginally in the red. Nikkei is up about 1/3%. Shanghai is marginally lower in trade. Hang Seng about 0.5% lower. And the SGX Nifty 2 indicates a start, which is ho-hum really about 27 odd points lower. So nothing that we can really make out from in the session today. But I think what certainly happened in the last few days is that the index, the Nifty that is, has gone back to the template of following global cues. Yesterday we were soft, the world markets were a bit soft. The previous 2 days the world markets are okay, we were okay as well. So the template has certainly changed to a one wherein the market looks to take directions on the basis of global cues. Just that, the broader end of the spectrum where the pain continues, there most market experts believe that there is unlikely that there will be any substantial resurrection of sorts. So you've seen that yesterday as well. ADAG, Diwan Housing, a clutch of other mid-cap names wherein the pain has been prevalent, continue to slide lower. That's the key thing that you need to monitor from a broader end of the perspective. But it's very difficult to predict what the markets will do any single day. We won't do that. We'll try and tell you what stocks could do in the session today. So GUIDELINE Finance in all likelihood could start off lower. That's amongst the first stocks to watch in the session today, because HDFC is going to sell through an OFS, sell about 3.1 crore shares or about 4% equity at a floor price of 290, which is slightly lower than the current market price. So maybe, just maybe, GUIDELINE Finance could react on open. It could also happen that it could start off lower and then recover some of those losses as well, because this is a temporary situation. Let's wait and watch what happens to GUIDELINE Finance, certainly a stock in focus. Adani Gas, this is important. It's a Times of India report, and which is why it is important. Maybe we could see some stock reaction as well. Total, which is the French company, is close to buying about 30% stake. I think the valuation that they are citing leaves a little room on the upside for Adani Gas if indeed the deal were to happen at that valuation. Let's wait and watch if Adani Gas were to react today or no. Wockhardt could be interesting. They've received zero US FDA observations for a bioequivalence center, of course, in Aurangabad. The major units, Chikhalthana and some of the others, still stay under the US purview. But this is a positive news, so maybe, just maybe, Wockhardt could have a reaction. And you know, we were partners at the Morgan Stanley Investor Conference. Amongst all the conversations that we did, I think the one that stood out for me was Anil Agarwal, the Asia Pacific BFSI expert, who mentioned in an interaction to us yesterday that he believes that the larger names, the likes of HDFC Bank, ICICI Bank, Axis Bank, etc., are the ones that could still have another 30% upside in the current calendar year. 30% from April 1st. So you got to do that math. But Morgan Stanley believes that after a very good run in FY19, there's a possibility of another good run for these names in FY20. There is also an SBI in this list, but this 3 or 4 names could circa 30% gains could be seen in those names. So do watch out for the larger banking names. For all of you who want to buy into banking, don't quite know, this was the Morgan Stanley advice. However, let's tell you what's lined up on First Word today. As US blames Iran for the latest attack in the Strait of Hormuz, we speak to Peter McGuire on how lasting could the impact be on crude prices. Advait then Johnson to fill us in on the new disclosure norms for rating agencies. Sajid Mangat then Johnson to tell us why jet stock fell 20% in trade yesterday and what's at stake. And lastly, Sharad Dubey Johnson to talk us about why Bengaluru-based builders are a relatively happy lot. Firstly, on to oil prices now, which have risen after 2 oil tankers were attacked in Persian Gulf near the Strait of Hormuz yesterday. The US administration has blamed Iran for the attacks and claimed that Iran is looking to disrupt the crude supply chain. Listen in to what the US Secretary of State Mark Pompeo told reporters last week.
The United States government that the Islamic Republic of Iran is responsible for the attacks that occurred in the Gulf of Oman today. This assessment is based on intelligence, the weapons used, the level of expertise needed to execute the operation, recent similar Iranian attacks on shipping, and the fact that no proxy group operating in the area has the resources and proficiency to act with such a high degree of sophistication.
And in response to this, of course, Iran has said that it categorically rejects U.S.'s unfounded claim with regards to this attack. Derek Wallbank of Bloomberg News brings us this update.
Iran's mission to the UN just in the last couple of minutes came out, said it categorically rejects all of the what it calls, quote, the U.S.'s unfounded claim with regards to these attacks. And that's important here because Iran had been accused by the United States of being behind this. I think some of the evidence that Mike Pompeo outlined, I mean, look, they're talking about some preliminary stuff of videos, pictures, things of that nature. There are U.S. assets on site. The USS Bainbridge is on site. U.S. ships were quick to respond to this because the Fifth Fleet, which is one of the United States' largest military presences, the Fifth Fleet is based in that area. So they were quick to respond. They've been on scene. In terms of public stuff, it gets a little bit harder. One of the logic points that Pompeo was laying out there really was a sort of commission by omission, the idea that Iran is probably responsible because it's right next to them and nobody else operating in that area is even possibly up to the ability of doing this. It was sort of the logic that Pompeo laid out. But I've got to say, it's really tricky here, and having covered this for a while, one of the things that's hardest here is that you don't see all of the evidence that's sort of behind the scenes here. The U.S. isn't quick to necessarily put out some things that may or may not still be classified. So it's very, very likely that as we're trying to react to this and traders are trying to price oil and figure out new risk threats, that we're operating in a little bit of an information asymmetry here.
Remember, it's a very busy part of the supply chain or transport chain, this place where the attacks have or the tankers exploded, the Strait of Hormuz. Choke point, as a lot of people call it. The chart, if you can understand, gives you a small depiction of how busy this piece of the transport chain is. And therefore, if there were tensions around this, it could well result into something much larger than what we are anticipating right now. Well, somebody who knows all of this very, very well is Peter McGuire. He's Chief Executive Officer at XM.com. Peter, good morning. Thanks for joining in. How significant is what happened yesterday? Because when I look at the prices, they seem more bothered about the slowing global GDP, because after being up 4.5%, they cooled off to end just about 2.5%. So how significant are these latest tensions and the U.S. allegation on Iran?
Well, that's a very good point, and good morning. Look, I think majorly we are in that global macro data slowdown. It's not working through that whole process. But then, we had those strikes yesterday. The tanker was hit, and one of them, interestingly, was a Japanese tanker. And we had Abe, Prime Minister Abe, visiting Tehran yesterday. The first time a Japanese leader had been in Iran in 40 years. So there's that point. Very much it is a choke point. Strait of Hormuz is one of the most busiest waterways in the world as far as crude. And there's the next point. As the market goes up 4.5%, down 2%, bit of profit taking. Let's see what happens over the next 24 to 72 hours as far as US and where they place all this with Pompeo, and naturally I think President Trump will get involved.
Peter, I take on board the point. I mean, I think any of us trying to second guess what US might do over the course of the next 24 to 48 hours with Iran is purely speculation. But we have this chart made on Bloomberg which shows that how over the last 8 to 12 weeks, more often than not, despite some news flow, the global stress on the growth has weighed in on crude prices, and they've only come down despite OPEC's best efforts. Would you reckon that if this issue does not escalate further, chances of a material crude price upside are very, very minimal?
Yes, I agree 100%. I'll be in Abu Dhabi, and it'll be interesting. I'll be in there Monday and Dubai on Tuesday. Next week on the way to Vienna for the OPEC meeting. And that normally that week lead up, you don't get these sort of large geopolitical shocks entering a market. And if the market does escalate and we see further geopolitical uncertainty, then I think crude prices will rally higher. But if we don't see any further actions as far as tankers being hit or any missile attacks, then I feel as though you'll see a softness to the crude market and it will continue its downward slide. So that's the conundrum at the moment. And for mankind's sake, I hope we don't see any further shocks, but we're dealing with an uncertain element, and that always remains an unknown.
Yeah, I agree. So, Peter, just very quickly, I think OPEC, what it will do seems to be a foregone conclusion with the recent spates of news coming out. What's your prediction for what crude prices do if there is nothing unusual that happens in OPEC as well?
I think it's softness. I think there's that you'll continue to the downside. I wouldn't be surprised to take a 48 handle for WTI, 49. And I think that Brent will probably around about a 57, 58. And that'll take possibly a couple of weeks to work through. Let's just see where, OPEC will have its own views on this. And they're conscious as far as US and China trade talks, G20 coming up and all of those major moving parts. So, again, it creates a level of uncertainty, and I feel as though there's more softness, and it's certainly a short trade unless you see, missile attacks and something ramp up there.
Appreciate you joining in, Peter, and giving us those insights. Thanks much for taking the time out.
Thank you very much.
Keep in mind, if indeed the situation between US and Iran changes, then these predictions would also change. Market regulator SEBI has come out with the new guidelines for credit rating agencies. The new guidelines require disclosures on the cumulative default rates, probability of default benchmarks, and liquidity indicators. This comes after a series of sudden and high-rated debt instruments that defaulted on repayments. Advait Rao brings us more.
The Securities and Exchange Board of India has published a new guideline for enhanced disclosures by credit rating agencies. These new guidelines come after criticism received from investors and promoters regarding sudden or quick downgrades or ratings revisions by the credit rating agencies in the cases of stressed or defaulting corporates. As part of these enhanced disclosures, the credit rating agencies will now have to publish a cumulative default rate on an annual basis. This will be both for long-term and short-term instruments and will be based on their 1-year, 2-year, and 3-year default rates for the various debt instruments that they rate. The second new disclosure that will need to be made is a liquidity indicator. Back in November, SEBI had told CRAs to include a liquidity section in their ratings releases. They have taken this a step further by telling the credit rating agencies to publish a liquidity indicator as part of their ratings releases, which would range from poor liquidity, adequate liquidity, strong liquidity, and stretched liquidity. Third new change is a new suffix that the market regulator has introduced, which is titled CE or Credit Enhancement. Most CRAs publish an SO or structured obligation suffix next to the credit rating when a debt instrument is backed by assets or securities. But to bring in more transparency, the market regulator has introduced this new CE suffix. So for credit rating agencies to assign to debt instruments when they are backed by different forms of credit enhancements, such as guarantees. The fourth new change is the probability of default rate that credit rating agencies will have to publish from the 31st of December this year onwards. But companies tell us that this is a new criteria that has been introduced globally as well. So therefore, they will take some time to work out the details on how to publish and measure the probability of default rate with the market regulator. The fourth change is that credit rating agencies and the market regulator will have to work on a standard operating procedure on when and how to recognize defaults and when to publish those ratings revisions when a corporate defaults on its debt obligations.
Okay, that's of course as far as credit rating agencies go. Now, full focus on a couple of themes or a couple of spaces which have been very, very active. One of the most active stocks yesterday was Jet Airways. It was down intraday about 20%. This dip came in after the National Stock Exchange removed the script from a rolling to trade segment. Now the chances are that the exchanges could impose more restrictions in the coming days as well. But the question is, yes, we all know what could have prompted the exchange to take such an action. The question larger is, were the exchanges a bit too late? And now that the action has been taken, what are the implications on the stock? Sajid Mangat's here with some of those answers. Sajid, you understand this very well. I think we were debating this yesterday as well. Were the exchanges a bit too late? And even if they were, what happens next?
So, the exchanges are relying on information to come out with any action on any company. And in the last few weeks, what they have found is that they repeated queries haven't company hasn't come forth with any of the answers or information with respect to those queries. So that's the reason why what the exchanges have decided to push the stock from rolling settlement to T2T and also close out all futures and options contract on June 28th, which is the last day of the June contract. Post that, any outstanding contracts will not be there. So contracts for July or August, all will have to be closed out on June 28th, and from June 29th onwards, it will be on a trade-to-trade basis. Basically, you cannot do netting of your trades. It's basically on gross deliveries which you have to do. That's the reason why why this action has been taken. But in doing so, the exchange was also very clear that information is not there. Plus the fact that the price which has been reflecting may not be the right price on the stock on the exchange.
Well, the exchanges are not alone in thinking like this, but any which ways, yeah.
Yeah, because they're saying that since the company is not operational and there is issue with respect to management, then the price may not be the right price which is getting reflected, and small and retail investors may get stuck in this stock going forward, and that's one of the reasons why they have taken this surveillance measure, which T2T movement is a surveillance measure, and going forward it's going to be much more stringent.
Okay, so Sajid, my question is this. I mean, I know we can't give a direct answer, but I don't know if you got a chance to speak to somebody or in some way your conversations or your thought process resulted this. A lot of people ask these questions to us, right? What happens next to the Jet Airways stock now that there was a reaction on the basis of the measures taken by the exchange, which was to the tune of 17–18%. What could happen next?
So, of course, the stock will be under pressure because any positions will be unwound. But as we said in a copy or on a copy on which is available on website, the stock is headed towards suspension. That reason primarily being that it's not following the listing obligation and disclosure requirements regulation of SEBI. Every company is supposed to sign that with the stock exchanges, which require it to provide information on a timely basis to the shareholders and to the investors. Right. And this is done through a disclosure through the stock exchanges. For the quarter ended March 31st and annual results, the results are still not out. There's already a notification or disclosure by the company saying that many of its key board members and key managerial personals have resigned. Yes. And so there is no one to sign the audited balance sheet. The auditors have also come out and clarified, saying that there is no management to sign the audited balance sheet, so we cannot go ahead with it. And so So there is a violation. First strike comes in there because the first quarter results, the last quarter results haven't come in. Regulations very clearly says that in case you are delaying, you pay daily fine up to from 1,000 to 5,000 rupees. But it's very clear that if you violate this regulation for 2 consecutive quarters, then your chances of getting into suspensions are very high. That's because as soon as 2 quarters of default happens, the exchanges give 7-day notice to shift the stock to a Z category for non-compliance of regulations. Once it goes into a Z category with T2T, it becomes much more tougher for people because there are additional surveillance measures comes in and others. Post that, there is a 21 days notice which exchange gives to all the shareholders and other exchanges where the stock is listed, saying that this stock is going for suspension in 21 days.
So in your wisdom, you foresee all of these happening step by step?
Yes, it's a step-by-step process.
It will happen.
It will happen.
In all likelihood.
If Jet doesn't get the management and the board in place.
Okay, so I think that remains that big monitorable.
That's
the only monitorable.
Yeah, because the other thing is that even if a new management comes in, on what basis are they going to sign the balance sheet?
Sure, I get your point.
The thing is that they can't take responsibility for the past balance sheet, right? So someone has to take a call, approve it.
Okay.
And no new management will take liabilities of past management by signing a balance sheet for a year ended
March 2019.
2019.
Yeah, that's true. Okay. Sajid, thanks so much for putting that into perspective. And as Sajid said, a story around this is there on the website. So if you really want to know what next for the Jet Airways stock, maybe this could give you some answers or some insight. Do log in and try and read that. The last piece on First Word today is on real estate. Organized builders are making the most of the new norms and a marginal uptick in demand, but at least in certain pockets. And while all metropolitan cities have seen some revival, it is the most pronounced IT city, Bengaluru, which is seeing this demand uptick. Sharad Dubey has done some number crunching to show how much the city's posted the highest jump in, how the city's posted the highest jump in sales, and whether it is expected to post the sharpest rise in office rentals as well. Sharad, how have you arrived at this? Why is it that we are saying that the Bengaluru-based builders are a happy lot?
Yes, Neeraj, we have taken the data, just before the quarter, before the RERA implementation over the 2 years and the quarter ending, the first quarter ending 2019 as per Anarock's research. So basically we see that the sales growth has been almost 80% of Bengaluru as compared with other cities, which is at around 57% odd. This has been aided by the growth in the mid-income as well as luxury projects, as more MNCs and startups, maintain the stronghold in the Bangalore markets. And also we have the new supply which has come in Bangalore is at almost 39% as compared to the rest top 6 cities, which is at 80%. To make it into a simpler perspective, the builders have cautiously focused to release less new supplies so that they can sell their old units, which actually brings us to the inventories. So we see that there's been a drop in inventories, and Bangalore has seen almost 44% drop over the last 2 years compared to other cities. And this has been highest amongst all the cities. And from this, we go to the office properties and see what's the situation. As per the Knight Frank's report, Bengaluru and Delhi, in terms of prime rentals outlook for 2019, is highest. This has been, and the list actually goes up by 10.1% for Melbourne. But you see 2 cities from India are there in this list. So this makes it a very interesting perspective, Neeraj.
Okay. And so, there are some tailwinds out here. Now, how are the builders in the city, Sharad, placed to make the most of the bump up? And what are analysts, stock analysts or otherwise, saying about them?
Well, Neeraj, first we need to see the builders, what their projects are lined up, and there's a very good set of projects lined up with almost 4 million square feet coming from Brigade Enterprise and almost 55 million square feet of projects coming from Prestige Estates, and SOBA also having around 25 million square feet. Apart from this, we need to see what analysts are thinking about. So they're very bullish when you see Prestige Group and Brigade with a 12-month potential gains of almost 23.3% for both of the stocks, while for SOBA it's around 3.6% as per Bloomberg. Now we see what the debt situation is. You see the debt situation is actually rising pretty much higher for all the 3 stocks. But despite higher debt, you see Prestige Estates and Brigade Enterprise do have a steady rental income, which comes to our last point, which is the product mix, which we see SOBA is having almost almost 100% revenues coming in from the residential, but for prestige estates and brigade enterprises, almost 25 to 33% comes from the commercial properties, which are the rent yielding assets, which actually ensure a stable annuity income, Neeraj.
Yeah, and well, with the REIT structure doing or taking wings the way it is, maybe these companies might stand to benefit as well, Sharad. But that's very interesting. Thanks so much for putting that into perspective. And while we talk about Oberoi Realty, Godrej Properties, etc., some of the Bengaluru-based builders are certainly the more happy lot right now. This is as per reports and conversations that we've had with analysts as well as builders. Well, that's all that we have on First Word today. But a very interesting conversation coming up. The government's push for electric vehicles is catching pace. Niti Aayog has recommended all new cars sold for commercial use be electric from 2026. That's not too far away, I must tell you. So are the automakers ready for the transition? And how are the EV startups, the electric vehicle startups, placed for the shift? We'll talk about that and more with Tarun Mehta, co-founder and CEO of Ather Energy, and Jitendra Adhiya, President Finance, Atul Auto, at 9:30 a.m. Stay tuned to Indian Open for that. After this break, a full tilt towards the day's trade.